What's going on, everybody? It's your boy C-Zar, and we are talking about the Fibonacci retracement tool yet again. But today we are not talking about retracements. Though I suppose we will go over them a little bit in order to gauge when and where we could potentially see extensions come in. Today's going to be all about Fibonacci extensions using the retracement tool, because in the retracement tool we do actually see extensions. And I'll just draw this real quick before I turn off the music. You can see here, right, from the 100 level, that's what the 1 means, to the 0 level, that's there. You move from top to bottom, you're moving down, you move all the way back up to your 100, but there are prices beyond that in the form of fib extensions. Anything before the 100 level, between the 100 to the 0, is a retracement. After that is the extensions. That's what today's video will be pertaining to. All right, I think this will kind of go hand in hand really nice with my most previous video, Fibonacci retrace tool pro tips for beginners. We're going to be going over the pro tips for beginners again, but with the extension kind of version here. So I'm choosing Blue Zell because I was looking at the chart beforehand. There's no special reason for it, but Blue Zell is one of my larger holds, so we're going to be using this. But I'm also going to be doing a lot of hypotheticals, kind of drawing in the black, if you will, like in the spaces here. So let's just do that. So first and foremost, with any fib, the most key areas tend as in like most of the time it is, but not always. Okay, so don't count on this 100% of the time, but tends to be in the golden ratio zone between the 618, the 69, or if you don't want to add the 69 on there, you're just not behind that, you don't see the same significance that I do, that's okay. The 69 is not a fib level, but the 618 is the fib level, man. It's the golden ratio to life and everything in this universe. So definitely a key area to look for. Now, whenever you're anticipating extensions, this level, the 618 specifically, is a very key level to focus on. All right, so let's use an example actually on Blue Zell. All right, this is probably a perfect one right here. So top to bottom, right? You're measuring from a discernible high. I'm gonna mute it real quick. Discernible high to discernible low. You can see why I'm not taking it from this high and this low. I'm going from the overall high of this, the end of this move, beginning of this move, to the low, the overall end of this move, the beginning of the next move. High to low, discernible high, discernible low. You can see we did a very classic bullish thing whenever indicating that we're going to, this is actually a perfect example, and I'm glad that we actually started with this. I haven't even looked at this. I'm just kind of freeballing it, guys. We're winging it here, but this is actually a very perfect textbook example of how we want to see extensions behave with fibs, and I'll go over that right now. I think looking at it on the 4-hour might even benefit us some. Let's see, go all the way back here. Okay, so this is the level, right? It's just on the 4-hour now, so instead of the daily, it's the 4-hour, which means we have 6 times the candles we did before, essentially. But from high to low, you can see you're working your way down. You don't actually have your fib officially drawn until you have the high to low drawn. So all this stuff beforehand, it's not really anything to focus on. But what you did here, based on my last video, if you watched it, you see a very kind of classic maneuver where you break above the 382, you're finding support on it, and then you move up. Now this is the key thing to tell you that you are looking for extensions. On the first pass of this 618, right, since you formed this move down, the first interaction with this area, you broke through it with ease. Okay, you broke through it with ease. The more ease that you have breaking through the 618, the more likely you will see extensions. When I say likely, I'm talking about 70% likelihood, 80% likelihood, maybe even more than that. Like genuinely, it might be more than 80%. I don't have the data before me of every trade I've made or every time I've seen this scenario play out, but just based off my own experience and what I genuinely feel to be the truth, I would say 80% is a conservative estimate as to how likely you would see extensions based on a move like this. Not only did you break through the 618 on the first pass, but you back tested the 618 for support. This maneuver right here is very classic, and it's very ideal. Whenever you see this, you're never guaranteed anything, but man, you're essentially guaranteed to see at least the 1272, if not the 1618. Now, with extensions, there's all kinds of extensions, right? Just like there's all kinds of fib retracements, and you don't have to use fib numbers themselves. You could use 1.5 or 2 or whatever number is significant in your life. It doesn't have to be a Fibonacci extension or number in itself. But these are between the 1618, the 1272, and the 1414. Those are all the kind of like expected zones, right? And that's how I define it. That's not, I haven't seen that been defined through anybody else. This is my own personal experience with this, but the 1272 being the minimum target to hit, I did learn that through other means in my time learning this, and that was probably somewhere on the internet, or maybe I learned it from some. I really don't remember. It's been so long, man. I would give credit if I remembered where. I definitely didn't learn that on my own, but what I'm telling you about the whole zone, this is something that I've adopted and acknowledged or come to recognize through my own analysis. Okay. And there's more things we're going to go over, but generally speaking, whenever you break, when you have this interaction with the 618, the target area is anywhere from your 1272 to your 1618. Now, these are all lines, okay? They are not requirements. You do not have to hit them. You actually did. You broke your 1272 and you stopped just before the 1414, but technically in the black space of nothing, right? You didn't have to stop at the 1618, and you technically didn't. You went a little bit above it, but pretty damn close on both accounts, right? And really, technically, if you sold this 1272, I'm sure you're not going to be upset that you missed this because it went back down to the 886. Now, first and foremost, again, if you're looking to trade or you're looking to invest or generally, if you're using fib extensions to kind of mark out a move, you're probably trading. So this is probably more pertaining to traders. But the first target area would be the 1272. Now, establishing target areas, several target areas, is good because what that implies is that you're not unloading everything all at once, but in increments, right? You're going to offload. Let's say you have 3 targets here. You might offload 30% here, or 40%, or 50%, I don't know, and you do another 25% there, or 25% there, you do that. However it is that you go about your trading, I don't know, everybody establishes their own parameters. Maybe you do an even 33%, I don't know, but having multiple targets is nice because you can offload a hefty bit here and then buy back down here and then move up here. And you might be thinking, well, how would I know to buy back down here? And that's because of the fibs. What we've done, everything on this is just so classic. I really am glad that this is the example that we're using. So I'm not just drawing it in a hypothetical scenario. We actually have it here from the point of breaking out on the first, or breaking the 618 on the first attempt, back testing it just to further signal that you will see extensions. When you hit the 1272 to the 1618 area, you generally will pull back to your 100 to 886 area, and specifically the 886. But you can find support on the 100, and you can find support in between. But I would say it's less common to find support in between the 100 and the 886 than it would be to find it strictly on the 100 or strictly on the 886, which that's not a normal characteristic in fibs. Normally, I found resistance here at the 1272, but I went past it. You don't see that with this kind of maneuver, if that makes sense. I wouldn't say it's common to find resistance here, pull back to your 886, but you technically saw a wick all the way down here. I wouldn't say that's common. It's like very, very strict, and you can see how very close we were to that 886. In fact, actually, we held it once, twice, 3 times essentially. Pulling this maneuver right here from your 1272 essentially, or your 1414, or even the 1618, all the way back down to your 886 is classic. And when you see that, when you're holding it as support and you move back above your 100 level, the next target is always the next extension level past where your previous high was. Let me say that again. The next target after seeing your expected zone, you could have stopped right here at the 1272. You could have stopped right at the 1414, which is essentially what you did. You could have even stopped all the way at the 1618, which inevitably you did. But I'm going to go over why you didn't pull back to the 886 or the 100 area there. You kind of did pull back to the 100 area, kind of. Pretty damn close, but I'm going to explain why you don't see it on the second attempt, okay? And that's normally you don't. And it has something to do with the constructive nature of fibs. You tend to stair step. And if you're stair stepping, stairs don't go 3 steps up and then 4 steps down and then up. They continue to move up, right? You like that. I don't know that essentially, right? And I guess I say that, but stair stepping I guess would involve up and then down and then up and then down. But it creates that structure where you wouldn't go like up and then down and then up and then lower and then up. It's not like that. that can happen. Anything can kind of happen, but again, extension area, common extension area being hit, you found resistance there, likely to pull back in this zone, which you did, and then you go to your next level. And I would say that the 1414 is where you found resistance. You definitely found resistance at the 1272, but that's pretty damn close to the 1414. I would call that. So looking at this for what it is, hypothetically speaking, and obviously it's very obvious to call because we're looking at a chart that's already happened. But if you guys watch my videos, you know, my day-to-day videos over the months, over the years that I've been doing this, you know that I would call for the 1618 being your next level to hit, because your 1414 was the last area that you hit. So seeing this maneuver, you would likely go to the next extension level up, which in this case would be the 1618, which is exactly where you went, okay? So now the ball is in the court of potentially finding support on the 1272 or the 100 area. It's actually more common in this kind of case scenario to find support on the 1272 and then continue to move up. But there are other things to look at. You know, you can pair it with the RSI, you can pair it with the volume. There's less volume coming in as we're moving higher. There's all kinds of reasons as to why you might not have continued immediately. But with that being said, you still are forming higher lows and you are more or less respecting this fib. You didn't hold the 1414 too strictly, but you did show a lot of respect on the 1272, both as resistance here and support here, which is nice to see. Resistance here, you can tell that out of the very significant amount of resistance you showed here, support here, resistance here, and throughout all this is a key level. So once you start finding support on it again, of course you're going to go up to the next areas, and you did, right? Not only did you break through the 1618, but you actually reached for the 1886, and you can see how this is kind of a common theme here, where you look for the next fib extension up as your potential area. Now, we didn't quite reach it, which that's okay. Again, these are lines, they're not prophecies, they're not written in stone. You don't have to reach it, but you reached for it, and you reached for it twice. This should tell you, because you couldn't even actually get up there, that we probably will go back below the 1618. And I'm not even looking back there. I don't remember what we did, but it wouldn't surprise me even if we went below the 1272, but I would more expect that we would hold the 1272 for support. So let's see what we did. We actually did. Okay, cool. We actually did not go below the 1272. Again, showing this higher low stair-stepping kind of formation. Now look at this. Now you see the significance that you see on the 1272. And again, I know the lines aren't there. They're not numbered, but this line is the 1272. The purple line, the pinkish line is the 1414. The green line is the 1618, 1886, 2272. I hope they're all discernible in color. I recognize it because it's my own format, so of course I recognize it. But what I was trying to say before I went on that little tangent was that you can see the significance that the 1272 is holding as we progress in the extensions, that you expect that significance to move up each step in the fibs, right? Okay, so before, your significance at the high points was at your 1272 and then your 886. Then you went up to your 1618 showing the resistance points. Then the support point, instead of it being at the 886, it's right around the 100. So you're stair stepping up. You're getting higher levels in the extensions on the highs, and higher levels not on the extensions but on the fib for the lows, okay? And then same thing here. Now you're getting higher resistance levels, and then you're also getting higher support levels, okay? And then even down here, still higher support levels. So now, it's not the 1272 you're finding support on, it's the 1414. You're holding with a very strict line, even all the way down here, as support. And you did break through your 1886. Now, it is weird to me, with such a strong, confident move with all this volume, that you didn't go to your 2272. It is weird, but things do not have to be ideal. And a lot of this fib, besides the highs, have actually been pretty damn ideal. And not to mention, but for what this is worth, this was drawn all the way back here. As you get further away, and this is a pretty small amount of price action. This is on the 4 hour. It's not like the most significant move to draw, right? But as you get away from these moves, even on significant fib levels, let alone more insignificant ones, which I would say this is pretty respected, not going to lie, but it probably is a more insignificant kind of measurement to use. As we get further away, you're going to see it be respected less, and we can kind of see that now. We're so far away from it. Look at the lack of respect, just sheer lack of respect. Now, however, we are finding support on the 1414, which is nice. Before it was the 1272, 1414 still being held. I would expect if we were to go down, based on what we've seen so far, 33.5 cents would probably hold if we were to go down. We might not, though. Maybe we're at the point where the 1886 will be held as support, or maybe we're at the point where this fib is no longer valid. And that's where it's on you to also be aware of where you are in the chart, and be aware of when you should cut looking at the fibs. Now, maybe things are too new, right? Maybe things you don't feel confident in drawing this high to low just yet, right? Because maybe you're showing respect, maybe you're not. You know, like maybe this is just not significant enough to you. You can always revert back to more significant moves, okay? The first move, again, the ideal move that I was drawing was this move, this high to low here, okay? But if you look at it on the weekly time frame, you zoom out, you can see a very significantly more substantial move, or a substantially more significant move, I should say, from this high to this low. It's a lot more discernible, right? It's a lot bigger in itself than this move was. So I would expect, being that this is on the weekly, this is a bigger fib, we might see respect on it for a longer period of time. And we are, actually. We're still showing respect on it, right? And look, you did the same thing here off of this fib. Hit the 1272, 1414 area. You went all the way down to your 886, found resistance at your 1618, found support on your 1414, found resistance on your 886, found support on your 1618, and now you're above your 1886, looking like you want to go to the 2272. And I would very much expect that that's what you do. And you might be like, isn't this the same fib you drew? No, it's not. It's just, it's the same interactions with the same levels or similar levels of fibs, because that's how it is. No matter where you draw it, like this, just let me show you right here, right? So this is what we were looking at the first time, this high to low. The 1272 was right here. The 1618 was right up here, like literally right at that peak there. These are different. The 1886 is the same level, to be fair. It's at the exact same level. But all the other levels are in different areas, right? So it just depends on the relative time frames you're looking at, you know. And I think for all intents and purposes, using that first one was a very good example, but this one is also a fairly good example of the fibs, and generally this is what you see. So, you know, just kind of explaining my process here as to where I would draw the fibs. That to me is a discernible high to low, and maybe you have to develop an eye, maybe you don't. And to me, the reason why I would say this high to low is where I would draw versus like this high to this low is because this was like, think of it like a spring. You're winding up. This is your wind up move right here before you went up. So I think this is where you draw your anchor points on your fibs if you want to look for extensions. And you guys will see me do that in my analysis. And if you're using fibs, you should do it in your own. Not financial advice, just technical analysis advice, I suppose. You should both look at the price based on the extensions, okay, from high to low and then the extensions, using it like that, but also from a low point to a high point, using it, you know, as you go. And what's beautiful about using the extensions, okay, first off, you can kind of predict where it's going to go, potential areas of significance as you go forward. But whenever you're using the retracement, which from low to high, you're actually using the retracement, you can use that same low for this high, and boom, you found support on the 382, as you can for this high here. And you didn't find any significance on this one, you know, but, you know, sometimes as you get further away, again, you find less significance. But maybe we will. You know, there is a total possibility we could go all the way back down to this 382 and then go up. We'd still form a higher low. It's not a bad thing, but I think, to be completely honest, I think that we are seeing less significance on this. And as you start to see less significance on it, that might tell you that you might need to take another fib. And there's nothing wrong with, instead of taking this low, and then going to this high. And again, boom, you found the 382, right? 382 support there, where here on this low, you're not really finding support on anything. But if you take that relative low to this relative high, you're finding support on the 382. This is not about retracements, it's about extensions, okay? And generally with strong moves, you want to see support on the 382. That's a very common thing. So no wonder you're moving up afterwards, which is also coinciding with the extensions, the extended moves of this move here from this high to this low, right? Some key areas that I have identified on my fib levels for my fib extensions are the 1272, the 1414, the 1618, the 1886, the 2272, the 2618, the 2886, the 3618, the 3786. You know, it could be the 3886, the 3272. I don't have that on there. That's just because, generally speaking, I actually notice that we will run right up to that 3618. We won't stop at the 3272, so I just took it off. But maybe you want to throw it on there because you notice that you find more significance on the 3272 than I do. You know, you don't have to have these exact numbers. I have the 5 here. I never actually like see these kind of numbers come into play. It's just more for funsies, I guess. Like if you're using like really long-term kind of analysis and you can see some significance take place as things go on. Do I have anything past a 6618? No, I don't. You know, you could go as high as a 2618, a 18, a 100 618. But the thing is like look at how high that is already, a 6618. Like a 100 618 it'd be literally off the charts. So it gets to a point where it becomes redundant to use those extensions, especially because as you get further away, you're probably going to use a different area for those extensions. But if you want to put those on there for yourself, you're asking, how do I do this? Draw your fib tool, okay? Double click it. It'll pull this up, and then you can put all your inputs in here. I've got a free one there that I'm not using, but you can, you know, take them away, put them back, you know, whatever, all that stuff. You can set up your color schemes. If yours has the little background in it, right, where it like looks like that, it has like the mist, the fog. If you move this down, it'll just turn them into lines. And then I set mine to fib levels based on log. Now, if yours doesn't look like this, if instead it looks like this, where you can't check it, it's already checked, but or unchecked, but it won't let you check or uncheck it. Go over here, click log, or go to the settings and then click logarithmic, and then again double click your fibs, scroll down, you should be able to click it then. If you want to keep it in log, cool, that's what I do. I would think if you do have your chart in the logarithmic scale, I would put your fibs to that. That makes sense to me. To each their own. And then if you're in the linear scale where the chart's not in logarithmic, it won't let you put it in logarithmic fibs, so you won't have to worry about that. But whatever you want to do. I use the log scale, but again, if you want to use linear, whatever makes sense to you, whatever you find significance on, that's totally up to you. It's totally fine. Just because you see someone, and I want to be very clear about this, I think this is very important to you, the individual who's watching this video, in your technical analysis. You can copycat somebody, and you're not a copycat. You're using methods that other people use, and you're applying it yourself. That is not, I mean, we all learn to read and write. We're using other people's methods, our teachers who taught us, you know, and we all have our own individual styles of handwriting, of course, but we all use the same alphabet, if that makes sense. I don't know. It's a poor analogy, but what I'm trying to say is you can do things exactly how I do them, or you can develop your own style similar to what I'm saying here, but using it in practice, in reality, with your own methods. Try it, man. I mean, I remember whenever I started technical analysis, I would go through things like this. I would literally go through previous price action that's already been formed and see where I could find significance on that. I would fine tune my fibs. I was obsessed, man. I was doing this all for all the time to try and find an edge, or try to find something that was similar to what someone told me, but it was my own style or my own format, you know. So you know, read things online. Go look up on Google, look up other YouTube videos for Fibonacci's and stuff like that. I definitely recommend that. I'm not one of those channels that's going to be like, I'm your one sole form of intelligence that can tell you how to do this, because there's more than a dozen ways to do this, guys. There's way more than that, you know. Like there's all kind of methods. So definitely I would recommend doing your research through other means. But I hope this is a little bit more of an in-depth explanation as to what to expect when you're looking for fib extensions. And I felt like there was something I had to say. Oh yeah, okay, so one last thing before I end the video, okay? And I explained this through a lot of my videos, but when you see a big move like this, okay, the odds of finding significance in your 1272, 1618 area are greater to see significance turbulence there first before just like making a straight shot up to your 200 areas. I'm not saying that you can't go up to your 200 areas. I hope this is making sense. You absolutely can, but the odds of you just going up there without seeing any turbulence in this area, it's not as likely on a significant fib, okay? On moves that are smaller, like this one perhaps, whatever, you know, going to your deeper extensions rather immediately, it's more common. Now this, however, it didn't take place here. You didn't go to your deeper extensions rather immediately. You conform to your normal extensions. We still are on the weekly, but let's see, maybe I can find an example here, right? Let's see. I mean, this little move here, we're on the 4 hour, maybe this will do it here, I don't know. Yeah, like you reached all the way you reached for it, didn't quite hit it, but you reached for your 2272. You'll see these deeper extensions where you just break through your 1618. Anything past the 1618 is considered a deep extension, at least in my mind, and from where I learned, originally. But anything past a 1618, the 1886 is a deep retracement or a deep extension technically. The 2272 and beyond, those are all deep extensions. You only see those generally on the first pass, like without finding any kind of significance on your expected fib extension range. You only see those on less significant fibs, smaller time frames, right? And I think that's a fine fib to draw, even though on a daily or a weekly that might not even show up at all. On a 4-hour it does. Same thing kind of here. And really what I would do is I would take this overall move, high to low, right? That's what I would do. But you could take this low or this high to low right here, and you can see that, boom, you went, I'll delete it here, but you can see, boom, you broke straight through your 1618, just all the way up, went right to your 2272, found support on your 1886, went up to your 2618, and then started working your way down, right? You see that, you see the deep extensions. This whole point of the video, what I'm trying to say is you see those deep extensions come into play on smaller ranges. You see the significant, the more common expected area, the 1272 to the 1618, come into play more often in larger ranges, okay? That doesn't mean that you can't see deeper extensions on the larger ranges. You can, it just takes more time. That doesn't mean you can't see the common areas on smaller ranges. You just might interact with it for less time, or it might just be less common for you to do so. But I think that's something of import. That's not something that anybody taught me. That's just something that I genuinely noticed throughout my time, my 7 years of doing technical analysis. And from the day I started doing technical analysis, you guys, I've used the Fibonacci retracement tool. So I'm not speaking out of my ass. I'm purely speaking from experience and what I would consider knowledge, but none of this is financial advice. I feel like obviously it shouldn't be construed as financial advice. It's literally just talking about the fib tool. But I hope this video was good. I hope it made sense. If it didn't, if I can do better, please let me know in the comments. I'm always open to criticism. Like genuinely, like I appreciate all the kind words, you guys. I really do. I appreciate criticism too, though. It helps me. If you guys have issues or you have problems or you have tweaks as to how I can make it better, and you let me know that, then I can tweak it myself. I won't take offense to it. If it's dumb, if you're literally insulting me, okay, I'll talk smack back to you. But if you're providing me constructive criticism, even if it's like, dude, this sucks, this literally made no sense, you should do it this way instead. I will take that. I will take that to heart. I will take that in mind, and I will use that in my next video with no hard feelings at all. So genuinely, let me know how I did in the comments. If you guys liked the video, hit that like button. Subscribe if you want to see more. Every week, and I say every week, but last week I didn't actually add to this because I was with my family. But every week I am planning on adding to this Fibonacci kind of playlist, and I've actually already started to establish it. We're going to get more videos as things come, but I've got the Fibonacci retracement tool, the playlist. What is the playlist called? Actually, what did I name it? Playlist. Fibonacci retracement tool education. That's what I named it. Right now, one video, about to put the second one in there. You guys, we're going to get into some exciting things eventually. We will be talking about, I feel like we've gone over enough things to start going over the basics of Elliott wave theory and of harmonic patterns, okay? I am not a pro. I would consider myself I'm pretty good with the fib retracement tool, the fib extension tool, okay? I'm pretty good with that. I'm not as educated in Elliott wave theory, but I can go over it enough to maybe spark your interest or show you kind of a general idea of what to look for and how to identify waves and how they grow, or like what target areas are and target like support areas are, structures of Elliott wave theory, and then harmonics as well. Harmonics and Elliott wave theory, you don't have to wait for me to make videos for that. You can look into it yourself. There are plenty of resources out there, but now that you have somewhat of a basic understanding of fibs and extensions, you can take it a step further if you'd like. Okay, so Really, the more you practice, the better you'll get at identifying key areas. You'll find areas that just make, as you start off, you don't really have the eye, and maybe some people do rather immediately, some people don't, but don't be upset if it takes time. If you're finding a good way to know, and I'm going to end the video on this actually, a good way to know, that you're drawing it from the wrong area is you're not seeing respect on it, right? Like you're going through your 100 level or your 0 level. This, to be fair, I'm trying to draw a BS fib, but this, you actually look like you're finding significance on relatively significant areas. You found resistance at the 1618 there. That's a totally BS high to low. You found support on the 1618 there, but if you're not seeing respect on a fib, odds are it's the wrong fib to draw. Even if it is from a good high and a good low, sometimes the chart just doesn't care. Sometimes it moves on from that. So use bigger, if I'm going on Binance where there's more historical data, use a bigger fib, or sometimes just use more relative fibs. Try it, mess around with it. If you're not finding significance on it, it just means it's not the right areas. So look for the right areas, and don't just look for any high and low. Look for the significant ones, which I feel like, looking at this chart for what it's worth, that's a significant high there. That's a significant low area there, and I would use the absolute low, maybe the first low, because that's kind of like a fake out low. I don't know. That's a discernible high there, opposed to this. That's not a discernible high, in my opinion, right? Maybe this high to this low for that move would work, but if you're drawing for the extensions off of this move, you wouldn't go from this low to this high. You'd go from this low to this high. This is a discernible low, and I would use that from this high to this low, not all the way down here. Even though you consolidated for this long, this was like the initial, like from high to low, that was the move. So for like a larger retracement, but for your extensions using this high to that low, I would say these are more discernible areas than like these would be. I don't know. I hope it makes sense. I hope I'm not too confusing, but to be fair also, before all this part of the chart existed, this high to this low would have been significant. So relatively speaking it is, but as the charts develop, you need to adjust as it does as well. So I hope that all makes sense. Hit that like button. Take care. I'll see you guys on the next one. Bye-bye.